banks being nationalized? Holy cow. It's crazy. Job losses, horrible. Another almost 590,000. It's just going to get worse. So I'm just going to say one more time, considering how bad everything was this week, we held on to support. Awesome. Earnings reports, gang, we basically got a good look last week of a really nice cross-section of the economy. They were mixed. You had companies like IBM and Apple, very good. Microsoft, not so hot. The banks, horrible. So it depends what business you're in. Now, for this coming week, looking ahead, you got McDonald's on Monday. That'll be a whopper. You got Caterpillar before the market opens. American Express maybe to zero. I don't know. We'll have to see how they're doing. You have steel stocks. You got DuPont. You got oil stocks. We'll get another good cross-section of what's out there. I'm not looking to do any earnings plays. Sometimes I like to do, straddles or strangles or ratio back spreads on some earnings reports. The VIX is pretty high. The values are pretty inflated. And if I'm going to do those types of trades, straddle strangles, ratio back spreads, I really like to do them the last week of expiration. That was the week before. So we got a whole month here. I'm not looking to make any specific plays. If you wanted me to pick out a few that could really have some horrible volatility, well, basically down, but some massive volatility, I would keep an eye on American Express. Freeport-McMoRan could be interesting. It was just at 30 bucks. That one could pop. McDonald's might move. You might get a $4 or $5 move out of McDonald's, but don't expect too much there. Let's see. Starbucks is going to have to be called Star Pennies soon. People just are not buying expensive coffees. It's too much with the economy. On Friday, there's Simon Property Group, SPG. That one might move, but I'm not looking to play any earnings plays. I'd rather see what they report and then go ahead and do a bull put, bear call, directional trade afterwards. But frankly, I'm more after the averages. What I'm looking to do this week is to trade the averages or trade, maybe like a double long ETF. You can give you a hint of what I'm thinking. All right. I'm getting a bunch of questions here. The conference, it's Mark and I that are going to be doing it, and that's probably going to be Thursday night. It looks like Thursday night around 7 p.m. Eastern. It is going to be recorded, so it will be archived if you guys want to listen to it later. Yeah. Okay. Let's just keep cruising. Let's just keep on going. Economic reports. You got the... This is funny. The FOMC rate decision, I wonder if they're going to go to like negative 0.25 or something. But I just want to hear what they have to say. That's really what it's all about. What are they going to tell us? Are they going to say they're going to do this, they're going to do that? What's left in their arsenal? They've emptied their gun on rate cuts. Another mover could be on Tuesday, the S&P Case-Shiller Home Index. That could be a whopper. That could be a big one. And then, of course, on Thursday you have initial claims. So there is enough economic reports that can move the market, but you've been getting hints probably as I've been talking here what I think and where the markets might be headed. I am leaning bullish. We've been leaning bullish for about 2 weeks, just saying watch, 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 watch. We've had some hammers. We had some dips below 8,000 on the Dow and then a move back above. I'm going to say one more time, all this negative data, and look where the indexes still are. I call that a divergence in itself. How comes we're not at Dow 7,000 by now? Why haven't the November lows been taken out? Now, I I think it's possible that we do that later in the year. But I've been watching, let's just take the bank stocks. Citigroup, oops, let me go back up a second. I want to show you guys something. I usually don't talk about other people, everybody talks about everybody, but John Molden writes interesting work. And I was forwarded an article of his, and it just, when I read it, it made me think about it. And I also heard it on CNBC, but you guys can find the same data by just Googling it. But let me go back up here. I want to show you guys something. Here, right here it is. Let me change colors. We'll highlight this paragraph right here. Think about this one, but sit down first, okay? Just make sure you're seated. Bank of America, Alcoa, American Express, Citigroup, GM, GE, JP Morgan. Gang, if they all went to zero, the Dow would lose just over 500 points, like 520 something. Seriously. GE, JP Morgan, American Express. It's like, are you kidding me? Yeah, 500 points is all that's left. Now, granted, these stocks have been crushed, but they just don't make up a huge portion of the Dow anymore. So that goes back to my theory, or just my comment, that even though there are bank stocks that were getting crushed, the S&P was still okay. The markets didn't get killed. And even if they only make up a certain amount of points on the Dow, fine, we understand that, right? But that doesn't mean people couldn't sell the other stocks, right? They could still sell other stocks. They didn't have to stop there. They could have sold Boeing 9 ways to Sunday. They could have sold McDonald's. They could have sold everything under the sun. They didn't. That does not mean we're going to go along with, wild abandonment or something. No. Just be on the lookout. Watch for the breaks. We're going to talk about that next. There is definitely a flag. If I was short this market, there is not a chance I'd still be short right now. I would definitely be covering. I don't mind having, bearish positions open, and I have a couple, or one, two, three. I have a bear call on RKH, but I don't know, I'm trying to think any other bearish positions. I guess you could say I'm more positioned long, but not aggressively long. I have my exit points very, very well defined. So let's take a look at weekly charting. I'm going to slide right on down to the Dow. You can see how basically 8,000 held. The market just did not want to give that up. It said, nope, we're staying there. Huge volume. Huge volume. We are getting lower highs. That's a bit of a problem, okay? You don't want to see lower highs, but at the same time, we're not getting quality lower lows. That's noteworthy. Doesn't mean we go all in. Doesn't mean that we all pick a trade tonight and we go long the SSO, I think it's the double long S&P 500. It's not what I'm talking about. If you want to enter a small position, you take a chance with a stop if we set a new low. Because if we get down to about basically 7,800, that's going to be a clean break, and then we'll probably quickly free fall right back down to the lows.